Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name is Jeremy Cronemeyer, Operations Manager for Wickham Financial Group, and I have with us Graham Wickham, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners. Pretty strong gains for the U.S. equity market last week. We saw the Federal Reserve come out and signal their intent to stick with their 3 rate cuts for this year. So we saw the S&P and the Nasdaq up about 2.3% to 2.8%. So we saw 10 of the 11 S&P sectors finish in the positive area, led by communications up just over 3%, and industrials just over 2.5%. We did see gold futures soar to another all-time high, settled in a bit, but still up 0.3%. If we look at Bitcoin, that was the one side that we did see tumble a good bit, off about 6%. But if we look at U.S. Treasury yields, they fell. Why? Well, the anticipation of the Fed cutting rates. So we saw those yields come back as we saw bonds values move up. So the Fed bumped up their 2024 GDP forecast pretty sharply. I mean, it went up from about 1.4% to about 2.1%. So still expecting a slowing but strong economy. They also looked at core inflation estimates, and they raised those a bit from 2.4 to 2.6%. Now, if we go over to some other general economic news, we'll look at U.S. business activity. That continued to expand in March. We saw the S&P Global Manufacturing PMI numbers. They improved a good bit from 52.2 to 52.5. So we are continuing to see strong economic performance. If we look at the U.S. housing market, now that rebounded pretty strongly in February. We saw existing home sales jump about 9.5% month over month, while we saw supply improve, as well as mortgage rates easing a bit. U.S. housing starts jumped about 10.7% month over month, while we saw building permits rise for up to their 6-month high. So if we go overseas, interesting enough, we saw the Bank of Japan raise interest rates for the first time in 17 years, even though we saw on the other side with Bank of England, they kept rates steady. If we go over to Europe, Germany's economic and business sentiment improved markedly, in March, maybe suggesting that they might see a rate cut maybe as soon as June on that standpoint. And if we kind of get prepared, Jeremy and our listeners, for the new week, what to expect? Well, we got a short week this week. We got a holiday week. The markets, international markets, we're going to see closed on Friday for good in observance of Good Friday. We'll see some economic numbers come out because we're pretty much done with earnings season. So we'll look at consumer confidence, some durable good orders, and some final readings on Q4 2023 GDP. So that'll be some of the things that are just drifting out this week.
Okay, well, sounds good. Thank you so much, Graham. I had a question for you. So if you maybe for our listeners, what do you think maybe they should be preparing for with the markets and the economy going forward?
Well, it is an election year. The markets have moved up, at least the S&P index. Maybe the small caps have lagged. Maybe international markets have lagged U.S. But expect some volatility. I think we have to, right? Headline volatility, geopolitical events, headline just from the election. But let's keep in mind that the market has rallied off the Fed looking to lower rates, off of reasonably good earnings, strong gross domestic product, and really strong consumer that is still spending, even though they're increasing their debt load a little bit. They're spending, so it's very strong economic numbers. So be prepared, long story short, for volatility. You got to expect it, 3, 5, 10%. You got to put those in the cards and say they could happen at any time. But fundamentally, the markets look strong, and we still haven't had great participation with the bond market. We still have small caps lagging. We still have sectors that haven't led, even though this market's expanding. So volatility, wait, third, fourth quarter, that's probably where we'll get some more fireworks, hopefully to the upside.
Gotcha. Well, we always appreciate the information, and
Yeah.
thank you to our listeners. And if you're a new listener and you're first time to our weekly wrap up and you want to see some of the previous ones, go check out our website at wickhamservices.com or our social media pages on Instagram, Facebook, LinkedIn. We're all over the social media pages there. So go check us out, and we look forward to seeing you next week. Thank you so much.
Take care.